one more thing I want to do is I'm going to drag the Fibonacci all the way from this liquidity right here to the downside, right? To the low. And can you see on the ground up and prof zones level right there? Can you see that on the ground up and prof zones level is our high time frame sell side imbalance and buy side inefficiency, which is an order block also on the higher time frame. Can you see that it's right there? Our zone is right there. So now it makes more sense for us to actually look at that zone before we drop. Hey, what's good, everybody? It's your man, Profit Zones, and Profit's not for professor, but for profits. And yeah, with that said, guys, welcome to episode 1 of GroundUp Breakdown. So basically what this series is about is we break down a chart from the ground up, or shall I say, from the top down. so yeah. So on this specific series, we might differ as to what pair we focus on each week, right? I will not share all the pairs that I'm currently looking at, but I will maybe share like 1 to 2, maximum 3 pairs, right? Depending on maybe I have someone else on the episode and they share their specific pair, and then we actually both look at that pair in different perspectives. So yeah, not to waste any time, I mean, let us get into the video. So yeah, we have the Aussie dollar. For those who don't know, that's AudUsd in front of us, right? And this is the weekly chart. So yes, guys, disclaimer, I am not an advanced smart money concepts trader or an advanced Wyckoff trader. I call myself and my approach the lazy Wyckoff method. Because yes, I have studied Wyckoff. Yes, I've studied smart money concepts. But to me, more confusion was actually introduced in my brain when I was using all the concepts and all these models, right? So I just boiled it down to the models that I specifically think are not the easiest, but the simplest for me to actually spot on the charts, etc., etc. So yes, guys, let's basically break this thing down. So as we can see, we have been on a downtrend. Ever since 2021, right? We have been on a downtrend. Some might call this just a pullback, but the reason why I say it's a downtrend is because the further back you go, as you can see, we've been trending downwards on the Aussie dollar. So now let's just start marking what we actually want to see. So I'm going to use this to actually mark my highs, this arrow to mark my highs, right? And my lows. Okay, so now you might ask, why did I mark these two? This is the range we're dealing in, guys. This is the range we have been dealing in, right? This low was created on, September actually, of 2022. So, and then this high was basically the highest high of last year, right? So this is the range that we're dealing in, guys. So now when we look closer, we can clearly see that, yes, there is some liquidity here. We can clearly see that there's some liquidity over there, right? And for us to clear that liquidity, we're going to need some buying pressure, okay? But with that said, we also had some nice sell side liquidity over here, which that was broken, right? That was broken. And that was broken very nicely. And then after the market actually broke that, the market now pushed all the way down and then retested and then tested. It's either there was an imbalance over here or an order block somewhere there, right? But we'll get to that on a lower time frame. And what happened after that is basically we started to push up again, up to where? This point of interest, this zone right here. Okay, yeah, this zone right here. And as you can see, we rejected and then formed a shooting star, engulfing, then we dropped, right? So now we can clearly see that ever since we ended 2023 and started 2024, we've been very bearish on this market. So on the weekly time frame, we clearly know that this market has bearish pressure, right? So now we'll look for, is there any imbalances over here, right? And is there any imbalances over here and here, right? So that's what we're going to look for on the lower time frame. Why? Because we want to see where the market might be attracted to. So without wasting any more time, let us get into that. So we'll move to the daily now, right? And as we move to the daily, okay, let's move to the daily. I don't know why this PC is doing this. Okay, let me just do this. It's dizzy all of a sudden. But yeah, as we move to the daily, we can tell that, okay, we had a bearish week close, right? 1, 2, 3, 4, 5 days. So we had a very bearish week close. So the first thing I see over here is that there is this huge imbalance right here, which hasn't been filled. It hasn't been filled, right? It hasn't been filled. So we have this buy side imbalance, sell side inefficiency, right? So it hasn't been filled. It's been tapped into over here, and hence this reaction, but it hasn't been filled. So with that said, we need to see below this imbalance, is there any other imbalance that the market will be attracted to? So as we move further back, let me zoom out. Over here, I can't see anything as yet. Just this little bit over here, right? So that's potential. But now with that said, let's look on the upside, right? On the upside, we clearly have this imbalance over here, right? And then this imbalance is very beautiful because there is liquidity right here. There's liquidity right there, right? So with that said, we know that if the market pushes up, right? If the market pushes up for the next maybe 2 weeks or so and breaks this liquidity, grabs liquidity and gets to this point, there's a high chance of it selling. And if it left an imbalance on its way up, then we know it might just tap that imbalance just so that it can push up again to fetch this imbalance, right? To fetch that sell side imbalance, buy side inefficiency. So with that said, we already know that for the coming week, for the past week, we closed very bearish, but the last day of the week, which was Friday, was very bullish. So this now can be a trap for buyers into a specific imbalance or order block, and then price just plummets, right? The whole week to fully fill this imbalance right here. So now let's go to a lower time frame and see if that is possible. Oh, before we do that, let's not forget that we also have liquidity right here that was engineered, right? And then now we need to see below this liquidity if there is any form of more imbalance, like a refined form of imbalance, because as we know, it works better when it's refined. So now let's go to the H4. Do not mind the H6. It's for specific other things, which my students know, but for now, it's not very important. Okay, I don't know why it's taking so long. There we go. So with that said, as we can see, guys, perfect. There is liquidity right here, right? And then the sell side liquidity over here. So this is basically liquidity for the day for the daily time frame, but it's sell side liquidity for the H4 time frame. So with that said, we can just do this over there. That is liquidity. And then we can just do this. This is sell side liquidity. And now, as you can see, we have a imbalance right here. We have a buy side imbalance, sell side inefficiency. Right? Okay. Good. Now with that, we know that if the market pushes down, which it's highly going to, it might just react off of this, fill this imbalance first, and just play around, maybe play around, and then drop all the way to this buy side imbalance, sell side inefficiency. Or the market might just tap into this imbalance and maybe it's refined as an order block and then push all the way up, guys, all the way up to where? Because we have filled all these imbalances here. We've filled them all. We've filled them all, right? We have filled them all. As you can see, we've basically filled them all. And if it pushes up, it's just going to be fetching this liquidity over here, right? It's just going to be fetching that liquidity over there. That's all it's going to be doing. So now with that said, guys, we know that if it pushes up, where are we going? Here. This is where we're going, right? And most preferably, since when we refine this daily sell side inefficiency, buy side imbalance, then we know that it's going to be this. So the market's going to tap into this and then drop right after this liquidity. So those are the two most probabilities. But now, which imbalance are we most closest to? Clearly, this one. And this sell side liquidity. This is what we're most closest to. So the chances of the market wanting to be attracted to that, since we know that we're overall in the downtrend, are higher than the market wanting to push up to this level. You see? So now, yes, with that said, guys, let us move into H1, right? So that we can see potential areas of where we can get involved in the market. So as you can see, guys, can you see that the market already created some lovely liquidity right here? Some lovely liquidity right here. And the market left a very lovely order block right here. Right? So we know that if the market now opens and then fills this imbalance or just starts to push up and breaks this liquidity, basically fetches that liquidity and taps into this order block zone, guess what? There's chances of the market pushing all the way down to fill this whole buy side inefficiency, buy side imbalance and sell side inefficiency, and then pushes all the way down, maybe pushes up again to test an order block or an imbalance that it left, and then we're basically trending all the way down, right, to this specific point of interest that we were talking about, which is basically towards the downside. But if the market breaks this zone right here, right, breaks this order block right here, what does that say? That is basically saying we need to keep our eyes on this liquidity right here. Why? Because there's a lot of liquidity engineered over here. So we might even do this. There's a lot of liquidity that was engineered over here. A lot, right? And if it does that, then where will it be trying to go? To create more liquidity, as we know that there's liquidity resting above here. And liquidity resting above here, right? And right after that, can you see that this is at this order block zone right here? And then right above that, the market might just want to now turn. And if it does that while forming imbalances as it pushes all the way up, then we know that the odds of when the market pulls back to the specific imbalances right there, it'll now buy all the way up, right? All the way to this zone. So that is basically what we'll be looking for in the week. That if the market breaks this form of liquidity right here, gets into this zone right here, then we know that we can potentially look for sells all the way to fill this imbalance and potentially create more imbalances as we push down, as we break, as we fill this imbalance, so that we can test those imbalances, and then the market just here's this liquidity all the way to this buy side imbalance, sell side inefficiency, right? And technically that will now be us continuing in the trend. Okay, that will be us continuing in the trend. So now, with that said, guys, let us move into one more time frame. I'm actually going to do just one chart today, which is AudUsd for the first episode, right? Because I need you guys to kind of know how I look at it. And then as time goes by, I'll be adding more pairs, but maximum it'll be 3, guys. So yeah, let's go into our M15 time frame. And let me show you how beautiful this is. So can you see, guys, that we have a very, very, very beautiful chart right here with a huge imbalance right here. And the market is usually attracted to huge imbalances, right? The market is usually attracted to huge imbalances, but it needs to clear liquidity first. And where do we have our liquidity? Right above here. Right above there. That's where we have our liquidity. So the market would actually do good for it to come test this zone of liquidity that was previously broken, push all the way up to enter into this zone. So the market was most likely to do this, create a chalk and push up all the way to this zone. And then once it clears that liquidity, we are going to be looking for a chalk right here, and then enter off of that, and then take the market all the way down to what? To this sell side liquidity, all right? And we know that'll be our first TP point. And if that breaks, then we're going all the way to the higher time frame buy side imbalance, sell side inefficiency, which is over here, right? And that alone, guys, that alone would be a clean 75 pip range. That would be a clean 75 pip range. So if you're using a 15 pip stop loss, that is a clean 1:5 trade, right? So yes, guys, with that said, that is basically what we're going to be looking for. As you know, there's 2 points of interest, but we're on the bearish trend and we are closer to the buy side imbalances, sell side inefficiencies, than we are close to sell side imbalance and buy side inefficiencies. And we know which point we need to be looking at for our sells, which is this point right here. This point right here. This is the zone we need to look for our sells. Why? Because the market needs to clear this liquidity that was engineered at the end of Friday, right? And for our buys, we know that it's going to be below this point. Now, but one more thing I want to do is I'm going to drag the Fibonacci all the way from this liquidity right here to the downside, right? To the low. And can you see on the ground up and prop zones level right there? Can you see that on the ground up and prop zones level is our high time frame sell side imbalance and buy side inefficiency, which is an order block also on the high time frame. Can you see that it's right there? Our zone is right there. So now it makes more sense for us to actually look at that zone before we drop, right? TP1, TP2, right? So that's what basically we're going to be looking at. And if this zone violates, then we already know what to do, what to look for, as I mentioned previously. But yeah, guys, with that said, I don't want to waste too much time because this was quite a long breakdown. To be fair, it was quite a long breakdown. But yeah, as I said, this is just episode 1 of GroundUp Breakdown. And in the future, expect more pairs, less time explaining it, and maybe 1 or 2 or 3 or 4, or a couple of guests, or maybe 1 guest per episode, as in a person that I can actually be analyzing the chart with in 2 different perspectives. And yeah, guys, this is your man, Prof Zones, and Prof is not for professor, but for profits. And by the way, the reason why I always say that is because prof can be a lot of things. People usually think it's professor, and some things it's profit, as in a profit. Some things it's profit. Something it's a lot of things, you know. But me personally, prof stands for profits and not professor. And at the same time, profit, as in PROPHETY, because we profit off of the past as we profit what's going to happen in the future. So to put it in simpler terms, we make profit of what we predict. That's what we do in these markets. And specifically, that's what I do. So yeah, guys, with that said, hit that like button, hit that subscribe button, share this video. Let's keep trading. Let's keep consistent. Let's keep bettering our skill, and let's keep being humble. With that said, this is your man, Prof Zones, signing out.